Okay, welcome to Sharpen Your Edge, Learn to Trade Fearlessly. This is session 4, and what we're going to be talking about today is managing the trade. This is literally the hardest thing that we do in the type of trading that we do is managing the trade. But let me give you a little definition about this. So managing the trade is everything you do before, during, and after the trade is closed. Effective trade management helps traders maximize profits, minimize losses, and involves tasks like determining position size, monitoring the trade, and executing entries and exits. So, like always, you want to be sure that you're ready to trade before you trade. And what does that involve? Well, it involves being aware of and following your trading plan, following your trading rules. Okay, we all know what those are by now. One of the big parts of being ready to trade is managing your emotions effectively. And of course, just like every day, halts, hungry, angry, lonely, tired, in my case, stupid. If something is not right, stop. Okay. If you're not feeling well, you're not into it, you can't focus, you probably shouldn't be trading and doing trades that day. So, how do we get ready for the trade? Well, basic things like is your computer and TOS screens, are you set up properly? Right? Are you using multiple screens? Is the four-way screen where it should be? Do you have your option chain and your monitor where it should be? Also, once you have your screens, do you know what you're looking at and what you're looking for? Okay, where are the indicators? Where are the candles? What's going on there? Are you watching for the trade setups or patterns to form? Okay, and let's look at that. While we're right here, I was noticing earlier that we did have some nice trade setups happening today, and I want to just bring up the hold on. I'm going to bring up the 1 minute chart here. Sorry, got a little goofy there. All right, let me bring this up full. So when I talk about trade setups, let me zoom in a little bit more. Things that I look for right here. Let me get my drawing tools out. And I want to show you a couple of great trade setups, things that I look for when trading. Okay, right here, this set of 3 candles. We had a reversal candle. We had a candle growing. And right here on this second candle, this is a great trade entry right about here on this second candle. So we've got 2 long candles. So the market is already, our price is already showing us a willingness to reverse. We're getting some long candles, short wicks, which means actual trading price is keeping up with the market maker price. But I love getting into trades on this type of setup right here, right on that second candle. Again, up here, again, up here, we've got a reversal candle right here. Wait for the second candle to kind of prove it and get in at the beginning of that candle as it's starting to grow. Okay, now the opposite is true right here. We've had a sell-off all day. It's almost like picking low-hanging fruit, but this is a great setup. We started moving down. Damn it. Sorry about that, folks. Okay. So we start moving down like this. We get a great long candle that shows me that price is definitely committed to this area. Again, the second candle right here is a great entry. All right. This could have been held down here. This was probably a 10-cent winner, but if you'd held it through the couple of pullbacks, you know, it'd have been just a massive winner right there. So I see these happen all day. Let me go back a little bit further. Okay, again, right here, we had a nice reversal candle. Sorry, did it again. So nice reversal candle right there, followed by a little reversal, but then another candle that broke through right here. So I'm looking to get in on the second candle right here. And look what a great trade that would have been right there.
Hey, Tim, this is Keith. Looking also at the Heikin-Ashi chart simultaneously can also give you confidence to stay in a little bit longer too, if you're still getting Heikin-Ashi candles.
Yep, absolutely. And we're going to talk about that in a minute. Absolutely. Also, and this is just looking at the candles themselves again. Here's another great setup. We had a reversal. Well, we've got almost two of them right here. First, this one has a great entry, but this one I like even better. See this series of candles going up. We get our reversal candle right here, and then our entry candle on the second candle right here. And look how this took off right here. Now, oftentimes we'll see a little bit of pause on the second candle before it takes off. That's a great clue to get into that trade right about there. And we just, you know, you look all through here and you'll see tons of these type of setups. These are things that Keith and I look for to trade every day, are those kind of setups. Let me go ahead and get back up. Boy, we are still dropping. That's amazing. Here's another one right here. Nice reversal candle right there. Second candle right here, getting in right here and taking this all the way down. So very nice. Okay, let me.
Is that your 1 minute chart, Tim?
This is the 1 minute chart. Yep.
Okay.
And let me push that back.
And while Tim is doing some adjustments here, going back to the on-demand trading, zeroing in on these changes too, can give you confidence to see what it's looking like on the candles as it changes too.
Yep, absolutely. So let me get my. All right, so that was watching for the trade setups and patterns to form. Just wanted to show you a couple of those patterns, but most of all, being prepared to act. Okay. Watching the indicators as they develop. Again, these are things that Keith was just talking about. We're going to be looking at the 1 minute and 5 minute candle charts. We're keeping an eye on the Heikin-Ashi chart. The 1 and 5 minute MACD. Keith just mentioned that, looking for the corresponding crosses with the 1 and 5 minute MACD. But sometimes those little setups that we have may not be near a cross. I mean, we may not be quite at a cross yet. when it reverses. We're looking at early entries sometimes just before crosses. We're looking at VWAP, volume weighted average pricing. We're looking at the supply and demand zones. And we're looking at the moving average channel. And we're also looking at the volume being traded. And finally, time of day. We look for, what news is coming out, pop at the top, announcements. These are all things that affect the market. Bond sales, especially lately, I've really been noticing how much bond sales affect the market. But let me escape that. I'm going to go back to here. And the volume that we're talking about is right here. Right? We look at that volume every day. We have our 100,000 traded red line here. We like to see as much volume being traded as possible, particularly for a trend. We like to see, at or above 100,000 during that. Excuse me, I'm going to have to flip back and forth here a bit during this presentation. Come on, come full. Thank you. Okay, so you've picked a trade, you're in a trade, now what? Now what happens? Well, as always, you want to follow the trading rules, follow your trading rules. Know your stop loss, okay? Be prepared to lose and not marry a trade. This is so important about adhering to a stop loss. A stop loss is no good unless you use it. Okay, we really don't want to get married to a trade. Besides that, another trade is right around the corner. Now, a lot of times trades come back. Okay, and we know this. A little over 50% of the time, those trades do come back and become profitable. Keith had a long shot yesterday that came back and got profitable, but I'm cautioning you that just anecdotally, we know over the years that we've been doing this, that a stop loss is going to save you money in the long run, okay? Because no matter how many of those long shots come back and reverse themselves and become profitable trades, there's going to be one or two that's going to bite you. And it's going to go on to $1 loss and a $2 loss. If you got in at $3.10, a strike that was at 310, that's $310 it's going to lose before it goes to zero. So if you're trading one contract, if you're trading multiple contracts, it's going to be much higher than that. So just be aware. This is what we recommend, is that you adhere to the stops. If you decide to stay in a trade longer, just be aware of what the consequences can be. Know your profit target. Okay, are we going for 5, 10, 15, 20? Well, we're going to go for as much as we can get. Absolutely. And this is part of what we're trying to do, is get more and more profit to cover those occasional losses that we have. And it's never wrong to take profit. No one ever lost by taking profit. And if the move is real, then you can always get back in the trade. You can take a little profit and get back in. This is something that I do a lot, is I'll take a little profit, take a bite, see if things are still moving, and then get into the same trade again. Always note the price action and spreads, okay? Focus on the body of the candlestick. Is the candlestick exhibiting, is it going in the right direction? How is the momentum working on this? This is something that I pay so close attention to. Again, I'm going to go back to the chart. Let me bring up my 1 minute here. Sorry, I've got so many programs open. It's very slow. Okay, and when I'm saying momentum, we're looking at these longer candles, these longer reversal candles. We love these. We love that kind of momentum going into, into a trade. Here was one that just occurred a few minutes ago, right here. Right. So you notice how the candles get longer on this. Again, this one I think I showed before, but we'd get into it about here, and then it picks up momentum on the way down. Nothing going on here, really nothing going on here since that little trade. But we're looking for these reversals, these momentum reversal candles. Those are one of our best indicators of momentum. We like to see those candles move. We like to see them stay up with the wick as much as possible. Want to
Team,
watch?
I have a,
Go ahead.
oh, I'm sorry. So I have a quick question here.
Sure.
So I'm trying to, understand top left and bottom right. So those two screen. So
Yeah.
I always look at bottom right,
Uh-huh.
but I do not focus on top left. So how do you uh, relate to these two? So do you look at both, or you just look at one?
No, I'm looking at both. I'm looking at my lower right, my Heikenausi chart, because I'm looking for crosses. But I'm for the momentum and the things I was just discussing, it's the upper left that I'm really focusing on.
Thank you.
Okay. Absolutely. Great question. And also watch for subtle or sudden shifts in flips or direction. But we don't want to get we have little reversals that happen all the time. We have little 5 cent and 10 cent reversals. I don't freak out about those. All right. Those happen all the time. Doesn't mean that the direction is over, but we need to be aware of if that reversal starts to get to be 20 cents, we got to flip over into protection mode. We got to start thinking about, while we're in the trade, start thinking about, okay, when am I getting out about this? Don't want to get out now before it gets to 30 and save myself 10 cents. And on things like reversals, a little trick is let's say we get down to 20 cents. We don't want to try to get out while it is moving against us. We want to wait for it to move back in our direction before we get out. If we go with the reversal direction and try to get out, we're going to get overfilled in the wrong direction. And that 30 cents is going to end up being 40 cents. This is why we start looking at it at 20 cents. But if you're patient and you wait for, a reversal of the reversal and try to get out on that rather than the reversal direction, you'll save yourself 10 or 15 cents on that and be in a good position. You may end up just losing, 10 cents on that trade than that. And all this has to happen pretty quickly, why you're in it.
But your stop is still out there, right, Tim? You still got your 30-cent stop. So it's not like,
yeah, you still got it out there. Absolutely.
yeah. Okay.
Yeah. Yeah. That 30-cent stop should be a hard stop. It should be, that's a metal door that we don't go through. We're just looking for some ways to mitigate some loss if we can.
Okay.
Okay.
Can I ask maybe Keith, it seems like you carry a lot overnight if they're against you. Is that because you're playing 2-3 days out with expiration, or do you see something else for that rationale?
Usually I'm looking at yes, I'm looking at least 3 days out, if not a week out. And we've had, say, for instance, we've had general strong uptrends, and the 5-minute chart looks like it's turning or has turned around. I may let that go overnight. Saying I carry things a lot overnight is misconstrued. I do not. I
Okay,
probably trade or keep maybe at the most 5% of them overnight. Maybe.
okay, all right. Well, more than anybody else I've heard the last couple of weeks. Okay,
Yeah, yeah.
okay.
Yeah. Yeah. Great questions, Mark. Thank you. Okay. So we're in the trade. When do I get out? All right. Follow your trading rules, of course. Know your stop loss. If it is hit, then get out. Okay. This needs to be a hard stop. Again, looking ahead, if we're down 20 cents, down 25 cents, we need to be thinking then about getting out. Because by the time we do get out, if that, like I was just saying, if that trade is moving against us, we hit 30 cents, we want to be prepared to be out. Now, this is just, let me make a distinction here. I use manual stops on mine. Okay, I don't set a preset stop on mine. I do manual because I want a better hands-on feel while I'm in the trade. So it's a manual stop that I set. I'll go in and I will get out at 30 cents or at 25 cents. A way to avoid all that is use Advanced Trader, where you can set the stop and it's absolute. Okay, it's rare that it'll jump over. It will on occasion, but you can set a stop and a trailing stop with Active Trader and never worry about it. All right. Keith, you use Active Trader, right?
I do. However, I don't typically use manual stops either, but with Active Trader, I can very quickly go and put my stop order in.
Yeah. 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 And if you're using the option chain, it's very simple to put a stop in. You just simply keep an eye on it and put an order in for 30 cents less. In fact, when you get into a trade, if you want to absolutely be safe, if you're just trading off the option chain as I do, soon as you get into a trade, go ahead and put a sell in for 30 cents less and you're safe. Okay. When that trade, then you don't have to worry about doing it. So when that trade starts going down, it's there. You don't have to worry about it, or set it at 25 cents. But when that trade starts turning around, starts becoming profitable, then you just simply cancel that order and wait to get out when it's profitable. So that's how you get out on both the option chain and Active Trader. And again, I've got a video on how to set up Active Trader, and we will probably do a lesson again in Active Trader. And I recommend this for new people to actually put in the stop, right? Just to save yourself.
Yeah. And Tim, I would agree. Also, if I've entered a stop in on Active Trader, I can easily drag that up or down too if I want to.
That's right. That's right. Along with your limit, which is one thing that's very cool about Active Trader, is you can easily, while you're in the trade, drag it up and down. For me, I learned on the option chain. It's what I'm most comfortable with, which is what I use. I think everyone should be familiar with Active Trader and use what it offers. There was a time when this was a year or two ago, when it was kind of wonky, and you'd get into a trade and it would immediately tag your stop and you'd be out of a trade right before you even got started. And that got to be a little frustrating. But I think they've worked all that out in Thinkorswim, so it's no longer an issue.
Yeah, it's been pretty solid, I would say, for at least 6 months, and if not 9 months for me on that. I've had no problems with it.
Awesome. Okay. All right. Know your profit target. If it's hit, then exit all or a portion of your position. Now, something that we do, not as much now, I know Keith still does it, is when I'm trading 100 contracts, when I get to a certain profit target, I may take off 50. Then I'm just using house money on the rest of that trade. No matter what happens, I'm using house money. So that's one way to do it. Or when you hit your profit target, get out. Now you probably notice that I tend to be real conservative on these trades because I want everyone to get profit. It may be a little less profit, but I want to make sure that we get profit out of 90+% of our trades that we get into. And so sometimes I opt for just slightly less profit, but there's a lot more profit in all of the trades that we take. If you're going back at the end of the day, you're doing a proper day analysis of the MACD on the crosses and reviewing your trades, you'll see that there was always a lot more in that trade. And we're trying to get further profit in each of the trades.
Yeah, Tim, I'll make a couple comments on that too. Particularly the first trade of the day, Tim and I both like to try to take a little bit less profit to get a positive one under our belt. But also, like today, the second trade I had was a call trade. When things were moving down, I'm not going to try to stretch that further. I want to be in and out of that thing, and sort of knowing what the prices are moving a little bit, particularly I'm not doing the next day. I'm doing, like today, I'm doing Friday's expiration. I sort of know what things are going, so I maybe have stretched that a little bit for 10 cents this morning, but I want to be in and out of that fairly quickly.
Yeah, absolutely. Next thing is when do I get out? Well, know how to exit a trade. You're either exiting on the option chain or on active trader, but make sure that you know how to get out of a trade, of course. Are we in a trend? Is it favorable to my position? Now, of course, consider staying longer in the trade. We're just talking about that. Unfavorable to my position, exit the trade and play defense. And when we talk about taking a defensive play, we talk about taking the reverse. Because sometimes we get into a trade and it immediately reverses, right? No reason. We've done everything correctly. We're following the rules. We're doing everything right. It just reverses, right? That's what happens with options. They just do that sometimes. It's the market maker just playing mean to us, but it happens. There's order flow going on behind the scenes that we're not aware of that may be hitting that requires that the market maker reverse that price in order to make those trades happen. And so we get a big reversal. Well, sometimes that big reversal ends up being a full-blown reversal, a full-blown retraction. Well, as soon as we can determine it, we're going to get out of that trade and quickly get into the new direction that trade is in. That's a defensive trade. Has the price direction changed, right? This is when we get out. It's when that price direction changes. Okay, order entry and order exit. Let me move up. It's all about the entry, guys. It's really all about the entry. Now, there are books out there who tell you it's all about the exit. In my experience, it's all about our entry. Our entry will determine, for the most part, what our trade is going to be. We are moving back our entries little by little to try to catch that reversal, pause, growth that happens in each trade. There's three things that happen, and I was just pointing that out on the chart. Is we'll have a reversal candle, we'll have a second candle, which is a growth candle, and it's on that growth candle we want to get in just before the growth. And oftentimes you'll see after that reversal candle, you'll see a small continuation candle happen with a pause. There'll be just a slight pause there as the market maker is organizing order flow, orders coming in before those all hit. And then we get that nice growth candle that gives us that nice 10-cent bump right off the top. Well, where we don't want to be entering that candle is after that initial growth period. because then we're wide open. You know, there may not be any more orders in the queue to extend that trend. So we want to make sure that we get in at the right part of that entry. Watch for reversals and the magnitude of the move. We were just talking about that. It's all, you know, we love reversals because that really sets us up for our next trade or on those reversals. A slight reversal is normal and may indicate a good time to enter or exit a trade. Attempt to get in or out of a trade at the optimal time. Now, again, we've been talking about what's the optimal time, and I'm just showing you some examples of that. Now, the beginning of the day this morning, we had that huge sell-off, long candles. It's picking low-hanging fruit at that point. When we've got that much sell action going in, and the candle is just continually dropping and dropping and dropping and not reversing, get in. You can almost get in at any time. Know your stop loss, right? If it is hit, then get out. And again, on active trader, you don't have to worry about it. And if you put a stop in on the option chain, as soon as you get into a trade, then you don't have to worry about it there either. Now, let's talk about playing defense. Follow your trading rules and don't violate your stop loss. And you get a theme going on here. Do you see what I'm coming back to all the time? If a trade churns hard or against you, you know, note it, evaluate it, and be prepared to act very quickly. You know, when we're in a trade, your absolute 100% focus needs to be on that trade. Okay. Don't let your mind wander elsewhere. You've got to be watching that candle, watching the body of that candle, and getting a sense of momentum and movement. And you'll notice that with QQQ and with most stocks and ETFs, that we have patterns that we follow, that reversal, pause, growth pattern that happens a lot on QQQ. But for some reason that doesn't happen, we've got to have the presence of mind to get out of that trade, right? We don't necessarily have to let it go to the stop. We can save ourselves some money if we can. But as I was explaining this morning, our 30 seconds or 30-cent stop really falls beyond the range of most reversals that we see on triple Q. And we've experimented with that a lot. We were at 10 cents originally, 15, 20, but 30 seems to be a sweet spot. How many times you've seen us get into trades and it will come right on down to 30 cents and reverse? We had one this morning that came down to 30, maybe even 31, and it reversed, but it did not trigger my stop for some reason. Decide what you're going to do next, right? You need to have the presence of mind to think of what, you know, scenarios may be happening. What do I need to do? What do I need to be aware of? If a true shift in momentum has occurred, then consider getting back in the trade in the opposite direction. All right, I was just talking about that. If we do get a big reversal, turns out to be a retracement, we're going to get out of that trade and immediately get into the opposite trade. Okay. Watch for retracements, setting up the spot of time to get into a trade. Again, going back to that reversal candle, that pause, and then momentum candle that we were talking about on the reversal.
Can I ask about a question on, I just want to, on the stop side, do your bands, the band from yesterday, if I'm keeping records,
Yeah.
can I use that band today, so supposedly to put my stop underneath it, say, or above it? Would that make sense?
Sure, you could.
Okay, I just want to know if that band's good from yesterday. It was there.
It is. Yeah.
Okay. Okay. So I could move, I could play with my stop a little bit. It might be a give up at 4 or 5 more cents, or it might be above it. I mean, or less. But I
Mhm.
certainly have a band from yesterday. I can position my stop above or below.
Yeah,
Oh.
absolutely.
Okay.
Certainly.
Just be aware that it can break out of that band though at any times. But you're right. If it's in a range that you're following that range and said, okay, well, typically it's hit this and bounced back a few times, I'll be a little bit more patient on that. And I tend to do that quite a bit.
Okay.
Yep. Yep. Yeah, watch for known. Actually, let me go back up. Yeah, no, we'll stay here. Watch for known turnaround times, like pop at the top, and when we get to zones where we know we have turnarounds. In fact, let's look at today. Let's maximize the 1 minute.
Please give me a definition for pop at the top. I really wasn't clear on what you really.
Sure. So every day we have noticed for some time that we get a lot of news that hits at 10 o'clock Eastern. And at that time, we get what we call a pop at the top, where we get a sizable piece of volume that comes in that may be reacting to whatever news or report that came out right at 10. And a lot of days we just get an algorithmic move, just a pre-programmed move that the market maker puts in at 10 just to shake up the market. We never know which direction it's going to go, but we get a semi-large move at 10 o'clock, and we just call that the pop at the top. Okay. Does that make sense?
Absolutely.
Okay.
And a lot of times after maybe 3 or 4 minutes, it changes direction too. And probably more times than not, that second direction or that direction change can be a nice run too in that direction.
Yeah. Yep. Absolutely. Okay, so you can see this morning, talking about the zones here. Notice how we came down here. We went right back up to the zone, to the minor zone above it, came back down to the zone, started going through. We should have a new zone down here, but if you go back, it's not so much today because we've had just a huge sell-off day. Well, here again, we had price come down to this minor zone, popped back up to the zone above it, come right back down, tried to pop up and then down. And then earlier today, this was why we were in session this morning, price just stayed between these two minor zones for about 15 minutes before it took off. But you'll notice that on any given day, price will move from zone to zone to zone. And the takeaway is knowing that when it hits these zones, much of the time it's going to reverse from those zones because these are price agreements that are really set from the market maker. And they happen because price is moving one direction, it becomes overbought or oversold and has to change directions. And that's really what's going on, is that simply price gets to a place where there's literally not one other trader on the planet who's willing to spend 1 more cent for that trade, and the trade has to reverse. The market maker has to start taking the next lowest bid and the next lowest bid, and the process of reversal starts to happen. But they happen a lot on zones. So that's why we mark these zones, of course, and I talk about it a lot. That's why we have these zones, is that we can predict reversals. In fact, I would not be surprised to see this price come all the way back up to the last demand zone and cycle back under again, going back into, it'll become overbought, and then it'll reverse, go back down and become oversold again. But we've just been selling off all day. It's just amazing how much equity has left QQQ. It's come out of the market. So let's head back. Here we go. Sorry for these delays in getting the slides back up. I apparently have too many things open on my computer. Okay, split the out. If profitable, take a portion of your position off the table. Again, we were talking about this earlier. This is something I used to do quite a bit more. I haven't been doing it as much lately, but is a great way to preserve profit. You say you have a profit target of 10 cents and 20 cents. You hit that 10 cents, you take half of your contracts off the table, and then you're playing with house money on the rest of that. So it's a way to preserve profit and extend your profit. So, you know, if you're doing, and you can start with, you know, 2 contracts and do it with 2 contracts. But it's a good little technique. Again, be prepared to take action. Okay. Yeah, to kind of wrap up things, these are just things to consider in the trade. Plan ahead. Prepare yourself to take intermediate steps. We get into a trade, it doesn't quite work out the way we want. It starts reversing. We got to be prepared for that. Am I prepared? Can I make my own decisions in the heat of the moment? And this is what trading is, right? We have hours of boredom punctuated by moments of sheer terror. That's that's what option trading is. And you need to be prepared at all times to make decisions very quickly while in the heat of the moment. That is, while we're in a trade. Now, we have some trades that last multiple minutes and it gets boring, but sometimes we have very quick trades as well. It's a question we need to ask. What each of us need to ask is, what is the maximum drawdown I'm prepared to take on my account, you know, on a daily basis, on a weekly basis, you know, and be prepared not to go beyond that. If you're having a bad day, you have 2 losses in a row, stop for an hour. You know, there's no such thing as a string of luck in trading. You know, trading is either good or it's not good. But 90% of that is dictated by when we get into a trade and where we get into a trade. So we can control our profit by just being able to enter a trade at the right time. But also you need to be prepared to go, okay, I am not moving beyond this today. I lost $100. That's all I'm giving back to the market today. God forbid we should have those, and we don't have them very often. But you need to be aware of, what's my limit? What's my drawdown limit? Because our whole goal here is to be able to trade tomorrow, right? We want to make money and we want to hold on to that money, and we want to have more money in our account tomorrow so we can trade tomorrow. But if we have a day that is not as profitable, we want to hold on to as much as we can, and we want to stop the bleeding as soon as we're aware that we're bleeding. Okay.
Let me throw one other thing in there too, Tim. If you're just trading like one contract to get started, I'll tell you something that I've gotten into that's a bad habit. It's like, oh, well, I'm only trading one contract, so let me let this go a little bit and sort of see what happens.
Yeah.
That isn't what you want to do. You want to project that what you're going to be doing is, if you're doing 50 contracts or 20 contracts, even though it's one contract, act like it's 100 contracts, and you'll be better off in learning good positive techniques as you go on.
Yep, absolutely. That's a great point, and I'm guilty of that as well. You know, it doesn't make sense for me to do one contract, let it run, and lose $100. You know, I could have done that just as easily with 100 contracts. So managing your trades, here's the takeaway: is managing your trades is just as important as planning them. Good trade management will never be reliant on a single trade, but it's indicative of your entire management system. Don't succumb to your emotions during the trade. This is hugely important, and which is why one of our very first lessons was on emotional balance and emotional control in trading. When you trade with a plan and you follow the plan, we take the emotions out of the trade as much as possible. I don't think we'll ever take the thrill and the fun out of it. Hopefully, we won't ever take the thrill and the fun out of trading, because it is a lot of fun to trade. Remember, you and only you are in control of all of your trades all of the time. Okay. All right. Do we have any questions? We've had some good discussion here, but do we have some questions?
Tim, do you have any video on active trader and trailing stops?
Yes, I do. And if you will send me a email and just request it, I'll send it to you. I haven't gotten them out yet today, but I've got a video that shows you how to set up 3 templates and goes through all of what Active Trader does. And I'd be happy to send that to you or anybody.
Thank you.
Okay. Anybody else? Okay. I'm going to go ahead and stop the recording.